Hey, what's going on, guys? Leo. So we're going to talk about the trade war situation and how it's affecting the stock market. Uh, Obviously, this is stirring up a lot of concern, a lot of unease, because we don't want to be in a prolonged trade war with these countries. So in order to win a negotiation, you have to have some sort of leverage, right? So it's no different than you trying to move a really heavy rock, right? You get that really long pole, you stick it under the rock, that gives you leverage so that you can push that rock and get it to do what you want it to do. And I think that's what Donald Trump is trying to do here by imposing such severe tariffs on these countries. So to put this in perspective, during his first term, he put 25% tariffs on China. It started out with 34 billion worth of goods, then went up to 16 billion. And by the end of his term, he had 536 billion worth of tariffs on all of their exports to the United States. This is a little bit different situation because China doesn't predominantly export to the United States. It's something like 20% of their exports go to the United States. So whenever you go in there and you've got 25% tariffs, it's really only 25% of tariffs on 20% of their goods that they export. Whereas if you look at Mexico and Canada, both of those countries, 80% of their exports are going to the United States. So you're talking about 25% tariffs on the majority of their exports. That really hurts. That's not something that you want to keep on your economy long term. And then Trump has also said that, if you come back at the United States and you increase retaliatory tariffs on us, we're going to double our tariffs on you. So going from 25 to 50%. So he's really putting them in a tough position. And I think that we've already seen this. So if we take a look here at what just happened this morning, the president put out that he spoke with the president of Mexico, and they came to a negotiation where they're essentially going to be postponing the tariffs on Mexico for an entire month, and they're going to be doing negotiations between the two countries. And in the meantime, there's going to be 10,000 Mexican soldiers coming down to the border to kind of secure the border and to stop the flow of fentanyl into the country, because they've expressed that's a really big concern with a lot of drugs coming into the country. So we're making very, very quick progress, and I think that this is a result of how severe the tariffs actually are and how painful they can be for the Mexican and Canadian economies. So it's really, we saw a little bit of I guess you could call it posturing in the beginning of, we're not going to listen to you, we'll just tariff you back. But then they kind of realized, oh crap, if they're a business, this is our biggest client. They take up like 80% of our business. We can't really afford to give them the finger. And also what he wants. I mean, this is the other thing. Like, he's using this massive amount of leverage to get things, but the things that he wants are not really that crazy. He says, well, just send military to secure the border so that, it's not just us trying to stop drugs flowing into the country. And then Canada is a similar situation, although it's a little bit more complex because there's other things that they do want, but it's not that crazy for them to come to an agreement very, very quickly, which will give a sigh of relief to the stock market once this is all behind us. We also got word that, I believe it's today at 3 p.m., the president is supposed to meet with Justin Trudeau in Canada, or not in Canada, but from Canada, and they're going to be going over negotiations, trying to figure out some sort of solution to these tariffs. Hopefully all this comes to a resolution very quickly. I think it will, simply because these other economies are going to be very motivated to get this thing resolved. Their economies really cannot take 25% tariffs for that long, because what ends up happening with tariffs, like let's say that you're getting supplies from one country and suddenly those become a lot more expensive to get, because whenever you import them into the country, like, okay, so real quick, if the way a tariff works, if you're a U.S. company, you import something for $10 and there's a 10% tariff, okay, you pay $1 at the port, and now your product costs $11. So if you're a U.S. company and you're importing things into America that you want to then sell, well, you're just going to source them from other places that don't have tariffs. You're just going to find your product cheaper somewhere else so that you can keep your profit margins and not have to raise prices for consumers. So you don't want that happening if you're either Canada or Mexico, because once you have new trade routes established, that's going to be difficult to try to reestablish your ties once you already have new routes of, or even just new competitive routes for whether it be clothing, corn, agriculture, whatever it may be. It doesn't really matter. You don't want more competition. So I suspect that we're going to see a very rapid resolution to this trade war, more so than what's going on with China, because China has a lot more. We don't have as much leverage over China because they are such a global exporter, whereas Canada and Mexico, they're very localized exporters just to the United States for the most part. I mean, 80% of it. So once we get some sort of good resolution to this, we're going to see stocks start to rally. Investors are going to be more willing to take a more risk-on position because there's less uncertainty within the market, right? Investors don't like uncertainty. They don't like wars. They don't like trade wars. They like things to just stay neutral. If nothing happens, great. Business can continue on like normal. Profits keep going up and so on, and the stocks just keep chugging along with as long as time goes on. So the crypto market is no different. We did see a huge liquidation event, which I'll be making another video on about Ethereum to kind of discuss what's going on there. But that was basically a huge liquidation event that happened that was basically triggered by the fears that we could be getting into a prolonged trade war, which it doesn't feel like that's the case, just because we have so much leverage, being that they're so dependent on United States consumers, basically. Now, we do have a video here from Justin Trudeau and his comments on the matter, so let's go ahead and take a look here.
We don't want to be here. We didn't ask for this, but we will not back down. The coming weeks will be difficult for Canadians, and they'll be difficult for Americans. The level of cooperation, the level of effective partnerships between our two countries that have been established over decades and generations means that this trade action by the Americans and our...
Yeah, so this is a whole lot of posturing. He says that they're not going to back down. Yeah, buddy, 80% of your goods are bought by America. You can't just ignore your biggest customer and say, yeah, we're not going to back down. That's not how trade works. You have no leverage in this situation. So I think that's pretty much it on the trade situation. I will keep you all updated as we get more information coming in. But right now, kind of my gut instinct is that this thing is going to wrap up fairly quickly. I don't see this being a prolonged trade war like we saw with China, where it took many, many years. And I think a lot of that stemmed from, because we came in with, the initial bout of, 34 billion worth of tariffs on China, then it got increased. My intuition is that it just wasn't enough leverage. They weren't as dependent on U.S. Purchasing as Canadian and Mexico are. So I think that we have a lot more leverage with Canada and Mexico, and this thing will wrap up fairly quickly. There'll be a lot more stability for the stock market going forward and crypto. So be looking forward to that. Get your buy orders ready. Always be looking for the buy opportunity. And until next time, I'll talk to y'all soon.